Hi everyone, welcome to this video review. The date today is 10th of June 2012. In this video I'll be running through the technical analysis of STI, the Singapore Stock Exchange. First of all, let's take a look at the chart. Here you can see that STI started on a rapid sell down since early May, and here the question is whether have we seen the end of the sell down or are we going to see further downside. Now let's take a look at the chart here, and you can see that an expanding triangle pattern has formed. Expanding triangles are typically made up of 5 subwaves. So we have wave 1, 2, 3, 4 and 5. And expanding triangles, as per normal triangle, are either the final wave in a move, or it's the pattern that appears just before the final move. Now if indeed that is the final move, then what we are likely to see is a further upside in this way. Okay, that is one possibility. The other possibility is it could break down to the bottom side as well. To get a better idea of where STI could be, whether we are going to see further upside or are we going to see further downside, let's take a look at some of the component stocks. First of all, the stock is Noble Group. Now Noble Group has formed a typical Elliott wave structure. Here you can see wave 1, 2, 3, 4 and 5. Now, a typical Elliott wave structure means that we have wave 1 followed by a counter trend, wave 2, okay, and wave 2 is normally retraces a large portion of wave 1. So we have that criteria met. Another rule is that wave 3 normally is the longest and in length wise, and it breaks down the price rapidly, and we have that criteria met as well. Wave 4 is normally a wave that slows down the move down, okay, and it typically takes the longest time, and we have this wave 4 in another expanding triangle. So we have here a subwave 1, 2, 3, 4, and I believe that we are in the middle of wave 5. So we have a B and a C coming up next. Now once we have wave 3, 4 completed, then the next one will be wave 5, and so here we have a pattern that up down before a recovery comes in. Okay, so remember, up down before a recovery comes in. Okay, so that is what we are also likely to see here, perhaps. Okay, a up and a final down leg before a recovery. Okay, let's take a look at another counter. Yangtze Jiang, also similar pattern, 1, 2, 3, 4, 5. Here the wave 4 is in a contracting triangle, so we have a wave 1, 2, 3, 4, 5, up, then down before a recovery to the top side. Okay, so up, down, and then up again. Another counter is Keppel Corp. Now Keppel Corp is one of the leading counters right now. Reason is because it has already completed its 5-wave formation. So here you have wave 1, 2, 3, 4, 1, 2, 3, 4, 5, right? Wave 4 and a final wave 5. I believe that it's already on its wave A, B, C, okay, before the price breaks down further. The next counter is UOB. Once again you have the wave 1, 2, 3, 4 and 5, and it's already broken through this trend line, which was tested quite a number of times, once here, second time, third time, fourth, and finally it broke came back to retest it and closed above. So this is very likely that we are going to see further upside on UOB in a ABC structure like this. And after a breakdown in price in this way, 1 2 3 4 5, the recovery will take place in a back to a Fibonacci retracement of either 38% or 50% or 62%. And for a wave 2 like this, it's normally 62%. The next counter is golden agri. Now golden agri looks like it has completed one extra leg, right? So here you can see 1 2 3 4 5 6 7 7 wave structure in a Elliott wave means it is not an impulsive wave but a corrective wave, which means that this is a correction and the trend will continue from the prior trend. Okay, so the prior trend was upwards, so we are likely to see further price upwards price gain for the golden agri, and it is likely to retest the previous top. Okay, so golden agri is looking bullish, but take note, it has to first of all break through this trend line, okay, in a convincing manner, and break through this region, because it was providing support previously and it just broke down from there. Next we have SGX. SGX is another counter that's also looking quite bullish, because what's happened is that we have this wave up here, right, with volume confirmation. So the price went up strongly with volume, then the price came down to retrace all of what it gained here, but the volume was extremely low. Okay, again the price went up, okay, with strong volume, and the price came down again with low volume. So this is pointing to a bullish counter, because there is quite a high chance that it's going to go up further. And some of the things to look out for is this. Here you can see the price was contracting in a tight range and it broke out vigorously. This is typical when a price contracts, it will normally break out strongly, and so we got that strong breakout. And this trend line was tested once here, a few times here, and a few times here. So it broke through that, came back down to test it. Next is likely a move up. Okay, it will face a resistance here with this trend line. If it breaks through that, then the next trend line is somewhere here. So SGX is actually looking quite good. Just take note that it needs to clear this area, okay, and then we can have a bullish move up. So there are some counters which are looking bullish, whereas some are looking bearish. But in the near term, okay, as you have seen in counters like Noble and Capital Corp and UOB, there's likely to see a further upside than a price down before the real recovery comes in. So this indicates that we are going to see a price coming down to probably about 2650 before we can expect any real recovery. And this is also in line with what's happening in the markets in US. For example, S&P 500 has made a upwards wave. It came down, and now I believe it's going to do another upwards wave, followed by a correction before we can see any real recovery. This recovery is also going to be another big effort, because it has to break through previous support, which will now act as resistance. It has to clear this trend line, it has to clear this trend line, it has to clear this support region. So it's the bullish case is not looking too well for the intermediate term for STI. Okay, at this point in time, I like to highlight that this video is for educational purpose only and is not to be taken as an inducement to trade. So take a moment to read the rest of the disclaimer. With that, I like to wish you a great week ahead.